Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday the 29th of August 2019 and we're providing our gold and silver price prediction for the end of this year and the reasons behind our projections. On Sunday, we provided our weekly update, which concluded with the following words. Exciting times ahead and $1,600 gold and $18 silver within the next 3 to 4 weeks is not an unreasonable expectation. Well, on Tuesday, we saw silver hit a high of 1821, a rise of over 3% in one day, and silver's highest level since September 2017. Gold also reaching a high for that day of $1,544, but it had been higher the day before at $1,554, and we had a closing gold to silver ratio at the end of the day at 85-1, where both prices had fallen back just a little. Now, we published a video on Tuesday which actually gained the most attention in some time, entitled $1,800 gold and $22.50 silver in 2019. Is this possible? Now, we put a link to that video in the description below. Now, in this video, we pointed out that there was indeed potential for both gold and silver to reach these levels, and we quoted the reasons why, which included: we have the bond market sending a signal that the US and many Western countries are moving towards a recession. The inverted yield curve announced last week is often a strong indicator of this happening. We have strong demand by emerging markets and especially their central banks for gold. Brexit uncertainties in the United Kingdom and their impact on Europe. Italian political and economic difficulties. Issues with Iran. The China-US trade war. Potential US-Europe tariffs. Fed changing course, reducing interest rates, but will face problems as the amount they can reduce rates by are limited. Portfolio managers are readdressing their strategic asset allocations and some are moving in favor of gold. Mixed financial results from major companies and volatility of stock indices from what has been all-time highs. And President Trump's Twitter feed also having an impact. Now, the video was basically created to highlight what could potentially happen given a set of circumstances which were neither extreme, that is beyond the realms of possibility, or overly cautious. Extreme is what the pumpers and their disciples are advocating, which is anything from $100 to $1,000 silver this year and $5,000 to $10,000 gold. Now let us add here, if there is military conflict with Iran and or China, or any other major country, then of course we shall see these prices skyrocket. But as such ventures are in no one's best interests, these black swans are most likely not to appear, or most unlikely to appear. Now, that said, there are other nasties lurking which could indeed have an impactful tailwind behind precious metal prices, but nowhere near as significant as the Schiffs and Neumeyers and others trying to flog their books and courses or boost their precious metal companies will encourage you to believe. All this said, what is our estimate of where gold and silver prices will rise to in 2019 and quite possibly close on the 31st of December? Well, we have said all along that we did not expect to see gold rise above $15.50 and silver above $17.50, thereby suggesting a gold to silver ratio of around 88. We were saying this when the gold to silver ratio was well below 85 and had not even touched the 92 level it has achieved in recent months. When it had become clear, however, that the battle between President Trump and China over tariffs was unlikely to be settled any time soon, and that global growth, including Germany's, was slowing and moving into recessionary mode, particularly in other European countries too, we lifted these targets to $1,600 gold and $1,850 silver. Again, with a gold to silver ratio of somewhere around 88:1. What we did not account for was Trump's Twitter tirade last week and ratcheting up of tensions with China, and including virtually calling the Fed chair an enemy of the people. This had a profound effect on markets which were already concerned about the 10-year inverted yield curve. It also became clear to us that the Fed is likely to have no choice but to lower rates in September, and in order to keep markets happy, promise at least another cut before the year is out, all of which serves to help precious metal prices. Now, it would be also tempting to follow the pumpers and give outrageous price predictions in order to clickbait our supporters and subscribers. We've already seen that our videos, even suggesting $1,800 gold and $2,250 silver as a possibility this year, has more than attracted twice, if not 3 times, our normal viewings. And we, unlike many other channels, have some of the most discerning viewers and subscribers on YouTube. We all like good news, don't we? Well, we are going to run the risk slightly of disappointing some of you here, and we apologise if we do. Now, before we do that, let's put in a caveat first. We have said this often, and we'll repeat it again. President Trump is an establishment disruptor. None of us know, until we see the final results, whether this program of activity will be successful or not. Which is why, to be frank, we are not particularly keen to either praise or condemn him for such moves. The one thing for certain, though, is that markets do not like uncertainty, and the more there is, the more unstable and fragile they become. Now, this is just simple fact. And as we do not know the limits to which the president is willing to go to disrupt the status quo, we have to add this caveat that our predictions and forecasts are based on a mix of fundamental analysis, technical analysis, historic precedent, and a strong grasp of geopolitics based upon what normally would happen under normal circumstances. We simply cannot account for a curved ball which no one sees coming. Now, on that basis, we have to take a look first at the equity markets, which at the time of writing, which is approximately 5 p.m. 1700 British summer time, are holding up extremely well, with the Dow standing at 26,368, up 332 points, and the S&P 500 standing at 2,918, up 31 points so far today. Part of this, of course, is also the result of China stating that they wish to resolve its protracted trade dispute with the US with a, quote, calm, unquote, attitude. Now, we are going to assume that the president will react in kind, and perhaps a deal later in the year will eventually be signed. But we're not holding our breath, as there is some way still to go. Secondly, the dollar index is above 98. In fact, it's currently 98.4. So all of those dollar crash forecasters can once again hang their heads in disappointment that they have not seen America's economy fail. The dollar is not going to collapse in 2019, nor 2020, even if it does weaken a little. But if anything, and as we have said so often, it's the best currency of a bad bunch, and will continue to be until its world currency status is undermined, which is likely to take many, many years to achieve. Thirdly, gold is already trading at a 6-year high in dollar terms, and at all-times high in many of the world's other currencies. Gold is currently up $300 since May, and is testing its 2013 market inflection point at 1550, and a number of chartists are anticipating a correction. We should also add to this the fact that historically, gold stood at $252 in September 1999. It then rose to $1,897, or if you like, $1,900 on the 5th of September 2011, a 750% increase. It then continued to fall to $1,049 until the 17th of December 2015, a 44% decrease from its high, and has now risen to the current level at the time of writing of $1,541, a 47% increase, and an increase of 600% since 1999, and considerably more than the 250% achieved by the Dow Jones over the similar period. Now, we believe a correction is coming short term. It's had a magnificent run, and this needs to consolidate somewhat. We have also compared gold to other commodities and indices, and are also aware that Warren Buffett's company, Berkshire Hathaway, is currently holding $100 billion in cash. So he is certainly not expecting the US dollar to collapse anytime soon for sure. Silver, in the past few days, has been leading the advance. It's still some way off its near $50 peak back in April 2011, but has risen past a number of resistance points. Historically, its price was as low as $4.07 on the 21st of November 2001, rose to $48.70 or close to $50 on the 28th of April 2011, fell back to its recent low of $13.58 on the 28th of January 2016, but then rose to a recent high of $20.71 on the 2nd of August 2016, the same year. Fell back again to a low of $13.97 on the 14th of November 2018, and is currently standing at $18.48, struggling to advance beyond that important $18.50 level. Now, you will observe from those dates that silver's lows and highs have been much more frequent than gold's and more volatile. Since 2001, though, silver is up some 450%, but currently trading at 62% below its 2011 high, compared with gold's 18% reduction. That said, the gold to silver ratio is currently 83-1. So, utilizing this information into our own personal algorithms and allowing for the following factors: the Fed is likely to reduce interest rates by 0.25% on the 18th of September. Both the 2-year and 10-year bond yields are currently inverted. That's not a guarantee of a recession, we add, but if it continues for a few months, then that could be a different matter. Asia and Europe and hedge funds have moved into gold earlier this week due to missing the trade on Friday. China and the US coming to some agreement before the year end. US equities continue to remain buoyant due to interest rate reductions and expectations of more to come. And remember, please, to an extent, not exclusively, but to an extent, equities are a substitute for monies that could go into gold and silver. Which is why we see when stock markets fall, money does tend to move then into the safer asset classes. And a moderately strong dollar, we're still expecting a moderately strong dollar despite interest rate cuts. Simply because, in comparative terms, it will still ride high when you consider the cuts and QEs that have to be introduced by other nation states. So our prediction for 2019 gold high is between $1,600 and $1,700. Between $19.50 and $21. At the year end, we're expecting gold to fall back a little to $15.50 to $1,600, and silver to rest somewhere between $18 and $19. Now, we still hold, as in our previous video, that $1,800 gold and $22.50 silver is a possibility this year. But that would be allowing for a furtherance of negative negotiations and political turmoil, which we are calculating will eventually be avoided, as President Trump has to win the next election in 2020. And to do so, he needs a strong economy, not one in turmoil. Now, prices for 2020 is another matter, as there will be more destabilization, and we shall deal with that forecast in a separate video later in the year. Now, tomorrow we shall give our estimates for gold and silver in sterling terms, as sterling has a slightly different dynamic to contend with. Now, we wish to close on just one point. To the critics out there who cannot wait to condemn if our predictions are, say, $100 out for gold and a few dollars out for silver, we ask you that before you make that criticism, take a look on YouTube and undertake a Google search over the past 10 or so years, and compare our forecasts since we began this channel with those of the pumpers, many of whom have been predicting an imminent dollar collapse and $10,000 plus gold and $100 to $1,000 plus silver for each of those years. Yes, those collapses were going to happen each year, and gold and silver were going to spike to these levels each year. No one can predict with 100% accuracy of what will happen, simply because there are too many variables affecting these prices, not least of which include human error, greed, and mistakes by politicians, bankers, and economists. But what we can say with a degree of certainty is that our estimates are based on responsible analysis, with zero vested interest to deceive you, as this channel's survival, frankly, is determined in large by how close and accurate we are, and a genuine desire on our part to guide you the best we can, so that you too can make responsible decisions with your hard-earned monies. By all means, do share your forecasts and assessments. It will be interesting to view them. A final reminder for those of you considering taking advantage of our 1-month half-price offer for joining our Inner Sanctum Bronze or Silver membership. You have just over 30 hours left to do so. We've placed a link in the description box below. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.